Today, Chipotle hiking prices to cover the cost of rising employee wages, and it might not be the only one. What does that mean for your pocket? And Republicans ask President Biden not to lift sanctions on a Russian pipeline project, especially since he's blocking American projects. We also hear how pressuring private energy companies is benefiting state-owned players in places like Russia and Saudi Arabia. And the Biden administration is dropping Trump's ban on TikTok and WeChat, but it is also ordering a new national security review of the apps. That and much more, coming up on NTD Business. Good evening. Great to have you with us. In the latest example of rising prices, Chipotle is putting up the price of its food. It says ingredients costs have gone up, that's pressure, but it's also blaming rising wages. Raised its minimum wage to $15 an hour recently, and now it's trying to make up the difference. NTD's Phil Zoe has the details.
Chipotle is increasing its menu prices. The Mexican eatery says it's to cover the higher pay for its workers. Staff will start getting $15 an hour by the end of this month.
Oh, that's awesome. That's fantastic.
But in order to pay workers more, Chipotle has to increase prices by about 4%.
I would probably suck it up and still eat there.
If it's for the increase of the wages of people, the quality is very good and it's very convenient. 4%, I'm okay with that.
But finance professor Michael Busler says that's how wage inflation happens.
Once you get those increased wages, it leads to higher prices. Once you get the higher prices, that leads to workers wanting higher increases in wages.
He says it's a vicious cycle and it ain't pretty.
Your purchasing power is going to go down and you'll feel that loss of purchasing power because you'll be able to buy fewer goods and services.
Things are going to go up. Everything's going up. Yeah, gas is going crazy.
It's really expensive.
Professor Busler says interest rates can also skyrocket.
Anything you want to buy on credit, like a new car or a new house or some new furniture, to finance it will be very expensive, probably too expensive, and you'll want to put the purchase off.
And if food prices keep going up.
Or maybe I'm going to buy a machine and I'm going to make my own coffee at home because, well, sometimes I don't want to spend $5 every day.
Big chains like McDonald's, Starbucks, and Olive Garden have also said they plan to increase the salaries of their workers. Phil Zoe, NTD News.
And if you like hazelnut syrup in your coffee, you might be disappointed the next time you order your favorite drink at Starbucks. The coffee giant is putting a hold on 25 menu items and ingredients because of supply chain issues and shortages. That's according to several news outlets, including Business Insider, which had a look at a Starbucks memo. The memo apparently said the hold on those menu items will last until supply chain issues are resolved. According to foodandwine.com, Starbucks said specific items will vary by market and store, and those items could include things like hazelnut syrup, toffee nut syrup, chai tea bags, and even green iced tea. Supply chain issues have been impacting many businesses across multiple industries due to the impact of the pandemic. And apparently banks don't want any more deposits, at least some of them. The Wall Street Journal reports that during the pandemic, freshly printed money from the Federal Reserve and the U.S. government in billions of dollars was lent or given to big businesses. But much of that money went unspent, and so it's still sitting in bank accounts earning interest. The banks aren't too happy about that. They say spend it or move it. NTD's Colin Fredrickson has the details.
Banks make money from lending out deposits, but right now they have so much money, they're just trying to get rid of it. Companies are reluctant to borrow, so banks can't turn those deposits into interest-producing loans.
Many companies are still very flush with cash. They had drawn down credit lines in the early stages of the pandemic, even done some borrowing just to build up a war chest, not knowing what was going to lie ahead in terms of the pandemic.
A key measure of bank profitability, the industry net interest margin, fell to a record low in the first quarter. This statistic compares interest income made from loans to the outgoing interest expenses paid to depositors.
Because interest rates are at record lows. Loan rates have really fallen, but you can only cut deposit rates so much. This low rate environment is something that squeezes bank margins, and it's happening to an extent that we haven't seen previously.
Banks have different ways of lowering deposits. They can persuade clients to move their money to a smaller bank or give them lower yields for additional deposits.
to make it less attractive to keep the deposits at the bank.
Though the economy is coming back, there is still a lot of uncertainty ahead, making companies hesitant to take on debt. Meanwhile, deposits continue to surge. Colin Fredrickson, NTD News.
Are you one of the super rich that had your taxes leaked earlier this week? You feel upset? Well, don't worry. The Treasury Department wants an investigation into how they got out.
So obviously we take it very seriously. I'm not going to comment on specific unauthorized disclosures of confidential government information. I can tell you that broadly speaking, we know that there is more to be done to ensure that corporations, individuals who are at the highest income are paying more of their fair share.
Media outlet ProPublica got a hold of a vast amount of IRS data. That includes tax returns for thousands of America's highest earners, covering more than 15 years. It didn't say how it got the records, but it seems to show that in some years, billionaires like Jeff Bezos and Elon Musk paid no federal income taxes. The IRS did confirm that an investigation is underway. And with pandemic restrictions winding down, people are now going on spending sprees to treat themselves. And almost half of U.S. adults are willing to borrow money to do it. Here's NTD's Evelyn Lee with how you can avoid a debt cycle.
4 out of 10 adults in the U.S. say they will treat themselves now that the pandemic restrictions are easing up, even if it means going into debt. That's according to a new survey by creditcards.com. Ted Russman, senior analyst at Bankrate, raises concerns. He says even though people are entitled to treat themselves after a rough year, consumers should be careful.
The thing that I'm worried about here is that we may be losing a lot of the financial progress we made over the past year.
He says many were spending less over the past year and could pay down debt, putting themselves in a better financial position. But now that restrictions are easing, people want to treat themselves. According to the survey, the top areas people are willing to go into debt are automotive, home renovations, and travel. But Russman says putting discretionary expenses on a credit card can add up in a hurry, and it can trap you in a cycle of expensive credit card debt.
Pre-pandemic, we found that more than half of people in credit card debt had been in credit card debt for at least a year, and more than a third had been in debt for at least 2 years.
According to research, homeschooling and childcare have taken a toll on parents. They're especially willing to indulge. So if you do want to splurge, he says you should come up with a plan.
You can either tap into a little bit of your savings or carve some money out of every paycheck.
The CEO of Solo Funds, Travis Holloway, says most people pay bills first, then treat themselves, and then save. But the flaw in that approach is that saving what remains is often little to nothing. And if you already have some credit card debt, using a rewards credit card responsibly might even help you earn some points. That's as long as it's paid off every month.
The good news is that these 0% promotions are bouncing back. So I wouldn't want you to use this as an excuse to overspend either, but used strategically, it can really help you.
He says no matter which strategy you go for, it's important to avoid the minimum payment trap.
If you have $5,000 on a credit card at 16%, and you only make minimum payments, you'll be in debt for about 20 years, and you're going to pay more than $5,000 just in interest.
He says even though just paying the monthly minimum seems affordable, it won't get you anywhere. Evelyn Lee, NTD News.
And Wall Street ended lower on Wednesday, reversing earlier gains. The Dow fell 153 points, about 0.44%. S&P 500 lost 8 points, about 0.2%. And Nasdaq dropped 13 points, roughly 0.1%. The meme stock craze continued, but retail investors turned their attention to a medical technology company called Athlon Medical. One of its devices showed positive results in 2 patients with the CCP virus. Athlon shares then jumped from $2.2 to nearly $11. Other meme stocks hot yesterday, though, reversed course to close lower, including AMC and Clover Health. Investors are now waiting for the latest gauge on inflation. The Consumer Price Index is due out tomorrow, but investors don't seem too worried. The 10-year Treasury yield dropped below 1.5% for the first time since May today. Gold and oil also fell. And Republicans are opposing Biden's move to waive sanctions on Russia's pipeline project. They say it puts American energy at a disadvantage. The Nord Stream 2 pipeline project would carry natural gas from Russia to Germany and Europe. Its CEO is a known ally of President Vladimir Putin. The U.S. sanctioned the project, but later dropped the sanctions. Republicans say that allows the project to move forward, while Biden restricts pipeline projects here in the United States. They say Biden's reason for waiving the sanctions undermines U.S. credibility. They also say it will cost American jobs and puts American energy at a competitive disadvantage. So, if it does hurt American energy companies, it's really just the latest setback in a pretty difficult year for the industry. In fact, Bloomberg reports that all the biggest private fossil fuel companies around the world are shrinking. It's not that there's less demand, people still need oil and gas. It's that pressure from governments or activists, even courts, or stifling private companies. But apparently, that's just transferring the business to state-owned companies in places like Russia and Saudi Arabia. I talked to former Texas State Representative Jason Isaac about what that means. Even from an environmental standpoint, does building up state-owned oil producers really change anything?
No, it's actually from an environmental standpoint, it'll get worse because you're right. We're not shifting demand. We're not reducing demand. We're just shifting production to other places in the world. And if anything, we should be producing that energy right here in the United States. We're the world's leader in producing energy, and we produce it more responsibly than anywhere else in the world. And so the last thing we would want to do is shift production to other places around the world. If you want to get natural gas and you want the cleanest produced natural gas, you should get it from the United States.
These companies, I assume they're not as answerable. They're not answerable to anybody. They don't necessarily have to be transparent about what they're doing. Am I correct?
Yeah, you're absolutely correct. These state-controlled companies don't answer to shareholders. They don't answer to environmentalists. And they certainly don't answer to Americans or American investors like BlackRock. But now Exxon answers to those people because they've replaced some of their board members. And it's going to be unfortunate for some of these large American-based companies.
Is this trend going to continue? It doesn't seem to be much. Maybe there's opposition. It doesn't seem to be as vocal as the other side. At least it doesn't seem to be the trend.
It seems like it's going to continue where you see financial institutions and banks discriminate against American energy producers. In Texas, we've been successful, the first state in the nation to pass a bill that says if you're going to boycott fossil fuels, oil, gas, and coal, then you're no longer welcome to do business with the state of Texas. So where you see states like New York and California that are divesting their pensions of fossil fuels, we are actually going to divest our pensions of companies that discriminate against the responsible production of American fossil fuels. And so this is a big win, not only for the environment. Again, we produce this energy better than anywhere else in the world, but it's a big win for the people that are invested in our pensions, like our teachers, our firefighters, our first responders. So it's nice to see Texas lead on this front, and we hope that other states will follow our lead and push back against these banks that are discriminating against energy.
So how does that work exactly? They're just not lending. If you're a fossil fuel producer, you just can't get a loan?
Yeah, when the bill was actually up in the Texas House, someone stood up and testified in support of the bill because he runs an oil and gas company based out of Houston that provides services to oil and gas companies. He's not in the production. And Chase Bank had discontinued his $500,000 line of credit because he's in the oil and gas business and for no other reason. That's pure discrimination. And then you saw the good story was that Frost Bank, a good Texas-based bank, not only extended the line of credit, but doubled it. And so now he has $1 million line of credit. You talk about having just over 50 employees that were worried about the business surviving and continuing because Chase cut the line of credit. But nice to see Frost Bank step in because it made financial sense.
You mentioned earlier you feel it's because BlackRock have investments in competitive energy sources, renewables. Is this really the case?
Yeah, absolutely. BlackRock has millions, if not billions of dollars. They're the largest financial services firm in the world at over $9 trillion in managed assets. They're part of the Climate Action Plus group of over 100 financial institutions that have over $50 trillion in managed assets. So they're trying to force companies out of one form of reliable energy production into another form of unreliable energy production and prop up bad investments.
And a bipartisan group of senators is trying to build support for a no new tax infrastructure plan focused on roads and bridges. Here's Utah Senator Mitt Romney.
What about raising taxes? Are you open to raising taxes?
We're not raising taxes, no.
Romney says group members have reached tentative conclusions on their plan. It's expected to cost nearly $900 billion. That's smaller than President Biden's proposal, but still pretty big. Biden rejected a separate bill from Republicans a day earlier. That bill was for $330 billion. The president proposed raising taxes on U.S. corporations to help fund his more expensive package, but Republicans have shown no appetite for tax increases. They strongly backed a 2017 tax law signed by former President Trump. And the U.S. Senate just passed a bipartisan bill to help the U.S. compete with Chinese technology and boost the American tech industry. NTD's Jessica Beatty has the details.
On this vote, the yeas are 68.
The Senate passed a bill Tuesday to boost American technology so the U.S. can better compete with China.
This bill.
Senate Majority Leader Chuck Schumer says as a percentage of GDP, the U.S. spends less than half as much as the Chinese Communist Party on basic research.
They believe that democracy itself is a relic of the past, and that by beating us to emerging technologies, they will be able to reshape the world in their own image. Well, let me tell you something. I believe they are wrong.
The bill is passed.
The bill passed 68 to 32. It shows that taking a hard line with China is one of the few issues with bipartisan support. Republican Senator Roger Wicker says it's a game changer for U.S. research efforts.
This is an opportunity for the United States to strike a blow on behalf of answering the unfair competition that we are seeing from Communist China.
About $190 billion would go to strengthening U.S. technology and research, and another $54 billion would go to increasing production and research into semiconductors and telecom equipment. The Commerce Secretary said the funding could result in 7 to 10 new U.S. semiconductor plants. The House still has to pass the bill before President Biden can sign it into law. Jessica Beatty, NTD News.
And the White House is withdrawing some Trump-era orders which sought to ban TikTok and WeChat, two popular Chinese-owned apps. The administration is ordering a new review of security concerns posed by Chinese apps. Trump tried to ban new downloads of TikTok and WeChat. He said they pose national security concerns because the Chinese regime can collect users' personal data. But the courts halted his order, which never actually took effect. TikTok also appealed the Trump order, requesting the Chinese parent company of TikTok to divest. That process is still ongoing. TikTok has over 100 million users in the United States. But Australia's Prime Minister is rallying G7 leaders to unify against China's economic coercion. He wants the World Trade Organization to punish bad behavior when it happens. NTD's Patrick Hayden speaks to one trade expert to get his thoughts.
Trade tensions are high between Australia and China. Australian Prime Minister Scott Morrison wants to see the World Trade Organization address economic coercion. He called out the issue Wednesday in Australia before heading to England for a G7 meeting.
At the G7, we will be working with others to buttress the role of the World Trade Organization and to modernise its rulebook where necessary. A well-functioning WTO that sets clear rules, arbitrates disputes objectively, and efficiently penalises bad behaviour when it occurs.
Morrison is calling to revive the WTO's independent court to resolve trade disputes. We spoke to one trade lawyer who says that would take years. He says he thinks Morrison has been misinformed.
In the normal American English, ain't gonna happen anytime soon. So, but the call for unity is absolutely the perfect.
Australia's blocking of Huawei in the country and its calls for an independent investigation into the origins of the CCP virus has infuriated China. China's retaliatory tariffs have disrupted trade in Australian grain, seafood, wood, beef, wine and coal. Clara says the G7 meeting is a good place to build ties with other leaders. The United States backed Australia on the matter last month.
I'm a bit hesitant to state that you will see action out of the G7, strong action. But politically, if you start to contact with domestic actors in all these countries, you can build pressure on the national leaders, and that's how you get things moving.
He says if they change China's trading status, then the regime will be willing to listen.
Sure. I would just say that the big stick of removing most favored nation treatment from Chinese imports needs to be waived, needs to be shown, and the West needs to start taking action in that direction. If that happens, then you will see the Chinese Communist Party respond.
He says using economic isolation against Australia won't work in the long term. He says if China keeps sanctioning people, it will alienate countries it wants to do business with in the long term. Prime Minister Morrison says the G7 meeting can give direction to a WTO conference on trade reform in November. Patrick Hayden, NTD News.
And India's industrial moguls have ousted Chinese tycoons among the richest people in Asia. Chinese tech moguls like Jack Ma for years dominated Asia's wealth rankings. But Bloomberg data shows that 2 Indian billionaires have now topped some of China's richest in net worth. One of them is the chair of conglomerate Reliance Industries with an estimated net worth of $84 billion. Another is an infrastructure mogul with $78 billion. Stock rallies in India boosted their fortunes this year. India's Nifty 50 index, which tracks the country's 50 biggest companies, has jumped 10% from its April lows. Chinese founder of the bottled water business Nongfu Spring was third on the list, with Tencent founder Pony Ma and Alibaba founder Jack Ma trailing behind in 4th and 5th place. And Huawei's tough times continue. Investment bank JPMorgan says it's going to exclude the Chinese tech giant from some of its indexes. Indeed, Patrick Hayden has the details.
JPMorgan says it will exclude Huawei dollar bonds from some of its most influential investment indexes. It follows increasing U.S. sanctions on Chinese tech firms. Last week, President Biden banned U.S. entities from buying or selling some Chinese company securities. The 59 Chinese companies allegedly have ties to the Chinese military. JPMorgan told its index users about the exclusion and said that Proven Glory Capital and Proven Honor Capital are explicitly named in Biden's order. Huawei was first blacklisted in 2019 over national security concerns. The ban has hit Huawei hard. They were once the biggest smartphone maker in the world, but now they are ranked 6th. First quarter results for this year show it has just a 4% market share. Huawei has repeatedly denied it is a risk. JPMorgan says it will exclude Huawei from the selected indexes starting July the 30th. Patrick Hayden, NTD News.
Still to come this evening. A baby food company is recalling some cereal because it has too much arsenic. Now it's quitting the rice cereal market altogether. Find out why. And an anonymous buyer in Miami made real estate history using cryptocurrency to buy a $22 million penthouse. One expert says this sends a message to the industry. That and more after the short break.
Hello, I'm Mike Lindell, inventor of MyPillow. Thanks to your support, you've helped make MyPillow become one of the fastest growing companies in America. Over the last 12 years, you've helped MyPillow create thousands of jobs right here in the USA.
When I got MyPillow, I'm asleep almost immediately. I stay asleep at night and I wake up more well-rested in the morning.
That's why I invented MyPillow. My patented fill adjusts to your exact individual needs and helps keep your neck supported and aligned. I'm interrupting this commercial right now. Retailers have canceled MyPillow, and to thank you for your support, I'm going to pass the savings directly on to you. For example, you get my 6-piece towel sets, regular $109.99, now only $44.98, or MyPillow dog beds for as low as $19.99 with your promo code.
For the best night's sleep in the whole wide world, visit MyPillow.com.
Why are millions of Americans moving their money into gold and silver? It's simple. The world has never been more unpredictable. The biggest economic crisis we've faced since 2008, and a government that's about to print trillions and trillions of dollars. That's why so many Americans are turning to gold and silver to protect their nest egg. American Hartford Gold is a trusted name to help families to safeguard their wealth. With an A+ rating from the BBB and 5-star ratings on the biggest review websites like Trustpilot and Google, American Hartford Gold can help you convert any qualifying IRA or 401k into precious metals. Or they'll help you to easily purchase physical gold and silver and deliver straight to your doorstep. Learn how you can protect your wealth with gold and silver today. Get this free 2021 information guide. Call 866-893-1493 or text TV to 65532.
Beech-Nut Nutrition is recalling one lot of rice cereal for babies due to high arsenic levels. Safety officials in Alaska say during a routine sample they found that the cereal's arsenic levels were much higher than the FDA allows. No illnesses related to the product have been reported, but Beech-Nut says it's worried it can't obtain rice flour that falls below the FDA's threshold, so it's just going to exit the rice cereal market entirely. The FDA first implemented rules on arsenic in baby food in August of last year, and consumer advocacy group Healthy Babies Bright Future says this is the first recall of infant rice cereal due to high arsenic levels it is aware of. Many of the biggest Bitcoin fans live in Miami, the world's crypto capital, according to its mayor. And one anonymous buyer there made real estate history using crypto to buy a $22 million penthouse. It's the most expensive condo ever sold by a crypto in the United States. NTD's Evelyn Lee has more on what this could mean for the real estate industry.
This penthouse was just sold for a whopping $22.5 million in the Surfside neighborhood of Miami Beach. And the new owner paid for it in cryptocurrency. That sets a record for the biggest known all-crypto condo purchase ever. And Alex Sapir, one of the developers of the Arte condo building, says this kind of transaction will be part of the new normal in the future.
It was really exciting. Exciting for many levels.
And what does that price get you in Miami? The buyer now has access to outdoor and indoor swimming pools, a sauna, gym, children's playroom, temperature-controlled parking spaces, and something they call a beachfront meditation pond. But its standout feature is a 3,000 square foot large terrace with oceanfront views. The buyer remains anonymous, and the particular cryptocurrency used hasn't been revealed. But the developers of the property, Alex Sapir and Giovanni Fasciano, say the industry is on the cusp of a radical shift.
There's a great deal of wealth that's been created over the last years. And, you know, that generation that's made this wealth wants to be able to use that crypto.
The Arte deal was closed in record time. It took less than 10 days from close to finish. According to Forbes, this deal sends a loud message to the real estate industry. Crypto is here to stay.
I think that that's going to be a little bit more complicated, you know, as far as paying rent and all that. But I think in residential real estate, I think it's going to be a big part of the future.
And his co-developer agrees. Giovanni Fasciano told Forbes that new wealth holders always turn to real estate as a way to preserve their wealth. Crypto buyers have been closing real estate deals as far back as 2014 to move their wealth to more stable asset classes. And now startups like Propi are offering crypto courses for real estate agents. Evelyn Lee, NTD News.
That's the latest business updates for today. You can still catch NTD Evening News with Stephanie Cox. That starts at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't let YouTube decide what information you get. That's your choice. YouTube is deleting our videos and cuts you off from a source of honest reporting. Make sure you don't lose access to NTD's news content, and take a quick moment to subscribe to our newsletter so no matter what happens here, you'll keep your access to a trustworthy news source.